everybody. Good morning. Come on in. Come on in. And we'll have the show that we deserve. The show that we deserve. Come on in, everybody. Come on in. You've been doing very well. Take your front seats. You're looking pretty. Get your beverage. And then we will begin the show that we deserve. Right? We will learn, we will earn, and we will have a lot of fun. That's always the goal, right? The goal is to have fun, a lot of fun. And we will, and we will. And we will, folks. Let me just send a message to my folks on WhatsApp. 165th episode of Thinkers Frequency. There it goes. Everybody's ready. Everybody who's waiting. Here and now. Here and now. Join in and we shall begin the show that we deserve. The show that we deserve. Let us begin. Alright, let me check myself on YouTube. Here and now. Yeah, my YouTube is good. Let me check myself on LinkedIn. LinkedIn is great. And so we shall begin. Right? What do you think? Should we begin? I guess we should. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Good morning, everybody. Welcome to Thinkers Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinkers Frequency, our daily mental workout. Our daily dose of insights and analysis which don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! But before we go, we gotta follow a tradition, right? You know the tradition. You know the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a copper mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Let's do it again. Lovely. Absolutely lovely. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we are in this together. It's just such a beautiful thing to say. With that out of the way, let's begin. A lot of developments happening in the Indian business ecosystem. Two of consumer brands are facing a strategic maneuver. One is Whirlpool. Whirlpool is getting acquired by Advent. Whirlpool was in the fray of getting acquired. They wanted to sell out, right? Whirlpool's India unit, held by Mauritius unit, essentially was looking at offloading its shares for a very long time. It's been a year, more than a year, that it's been going on. In February 2024, they sold some part of their share. They want to keep 20% in the Indian entity, the foreign play. Now the foreign play is also facing a lot of issues. They wanted to recast their debt. They needed some cash. And they figured out that selling out the Indian unit is a way to go. Indian unit has a revenue of about 3,800 crores, right? Last year they did 7,400 crores. So in April to September, half a year, they've done 3,800 crore, which is down 3.7%. So the Indian unit is not really growing, right? It's not growing well. And profitability profile is okay, like barely anything. It's 5% net, right? At a revenue of 7,500 crores. They're looking at 313 crore net last year. That's what they did. A lot of companies were looking at buying this. Havells was in the fray, Reliance was in the fray. A lot of companies were in the fray, but eventually all of them dropped out. And now the private equity player, Advent, is the only person, is the only party, which is taking the deal forward. 31%, and then, an open market transaction will be triggered. At the moment, 51% is held by promoters. Market cap is 16,000 crores. 16,000 crores, that is essentially a revenue multiple of 2x, right? That's what these people are getting. Not very cool, not very cool. In February 24, Whirlpool sold 24% in Whirlpool India for 4,900 crores. That's when SBI, Aditya Birla, these mutual fund players came out, right? Now they are looking at bailing out. 20% they'll keep. They'll use this money to probably cast their debts, the US unit, right? The international play. But Indian Whirlpool is essentially going out. Whirlpool used to be a pretty ubiquitous brand. However, it turned into a mid-market segment. Mid-market segment is when everything dies, right? Either you're premium, either you're mass market. when you're mid-market, you're neither here neither there, especially in this business. So very complicated play, but now it's coming to the end for that company. I guess they ran a pretty good ad campaign. Whirlpool, something like that, right? That's when the brand gained a lot of ubiquity. I don't know which ad agency essentially worked on Whirlpool's ad. Do you have any idea, folks? Do you know which was the ad agency which did the trick? Well, sometimes brands don't say, but ads do. Just like Royal Stag, right? The brand is sold to Tilak Nagar, Pernod Record, no longer owning the Royal Stag play. Royal Stag was Men Will Be Men. No. It was Seagram's. What was that brand which Men Will Be Men, essentially, which just got bought by Tilak Nagar? Tilak Nagar acquisition. Imperial Blue. Sorry, Imperial Blue. Royal Stag was the music play, which a lot of musicians and all of those CDs, cassettes and CDs that they try to sell. So Imperial Blue has been sold, but the brand Men Will Be Men, the ad campaign, that has stayed. Similar is the case for Whirlpool. The brands got diluted, but the ad campaign, so to speak, stayed. Anyway, speaking of brands and ads, folks, Haldiram essentially is looking at tying up with a US company to start a sandwich chain. Jimmy John's US company is called, which is this company? Inspire Brands, yes. So Haldiram is looking at tying up with Inspire Brands to bring in Jimmy John's in India. Well, sandwiches, who gives a shit about sandwiches, especially in India? Subway is in decline. Subway is globally in decline. There are no parallels to Subway. Indians are more towards, rolls and wraps and kathi rolls and stuff like that. That's been the North Indian palate, definitely. In the East India as well. South, burgers okay, but not really sandwiches. So India is not a sandwich nation, more or less. But Haldiram's is looking at the Western cafe audience with this, right? So they already have a 2,000 crore restaurant business, which does really well. But I guess they are looking at some sort of inorganic growth. And for that inorganic growth, they are tying up with Inspire Brands. Now, these are the people who are also responsible for Dunkin' Donuts in India. Dunkin' Donuts is, of course, another failure, right? The Domino's guys, the Jubilant guys couldn't really make Dunkin' Donuts fly in India no matter what they tried. So that is the part. Do you agree with this strategically? Do you think this is a mistake? Well, definitely, I for one definitely believe that this is not coherent with the Haldiram strategy. I think there is a comment by Mr. Ravi Kumar Gupta. He says, good diversification for Haldiram. Sandwiches complement existing product portfolio of Haldiram. Well, I have a contrarian view. I think India is not a sandwich nation. India essentially, so I'll tell you about a local market, an anecdote, but still relevant. There used to be something called grilled sandwiches. Okay, grilled sandwiches were coleslaw and grilled sandwiches. They used to be doing really well about 10-15 years ago. I used to be a very, very loyal customer. That was a mid-market small chain which was growing up. So it was like Nirula's, but in 1980s. It was up and coming. It was growing, but it wasn't everywhere yet. But it was growing, right? Now, 10 years later, I was just interested in grills because back before COVID, they had opened like 15, 16 stores and so on and so forth. Now, 10 years later, like a couple of years ago, when I went to grills and I just started talking to the owner, right? I saw the menu totally changed. Now, grills sandwiches, it was sandwiches and burgers, but it essentially changed from sandwiches to rolls and so on and so forth. And I sparked a conversation with the owner. I started talking, sir, kya hua? What happened, sir? And he was like, sandwiches fell out of fashion, right? Nobody wants sandwiches in India anymore. And sandwiches essentially just, they fell out and everybody started talking about rolls and chap rolls. Essentially soya chap became a staple in North India especially. And then COVID happened, and we had to shut down stores because the inherent demand for sandwiches fell out of flavor. That was grills, right? And then when I was reading the biography of Subway, the autobiography of Fred DeLuca, sir, who was the founder of Subway, uh, sandwiches really grew it. They really, had a cliff period, but after that cliff period, they really fell. So if you look at Subway, it was valued at just 10 years ago. It was about $100 billion, right? It was a privately held company, so market cap wasn't clear because it was 100% owned by the Delucas, 90%. So nobody could really put a number on their market cap. But at its peak, Fred DeLuca, sirs, rest in peace, chain Subway was essentially paralleling McDonald's as far as market cap and growth numbers are considered, right? So it was there. From there, a couple of years ago, Subway was bought for $7 to $8 billion. So basically, Subway's market cap just blew up by about 80 to 90% conservatively, or maybe 50-60% if somebody says no, they were not valued at 100 billion, at max they could have been at 50 billion, whatever you say. From 100 billion or 150 billion or 50 billion, from that range, Subway was acquired by a private equity play for 7 to 8 billion dollars, right? That was Subway. Overall, Subway's franchise value in India has also decreased. If you look at number of subways that have been coming around in India, they are going down. And the beauty is that there is no parallel of Subway. So even though Subway, revolutionized the whole sandwich ecosystem, there is no Subway uh, counterpart, right? So if you look at new chains which have been coming up in India, they are Wow Momos. By the way, Haldiram's family invested 150 crores in Wow Momos, just for fact. But Wow Momos was one. Then there was Burger Singh. Then if you look at smaller chains like 34 Chaurangi Lane, right? These are rolls, guys. Yo China, that's a Chinese outlet, right? Pizza, you have a lot of pizza chains. La Pinos did very well, right? So there are a lot of action. There is a lot of action in the pizza, burger, momos, and all of these places, but not sandwiches. So sandwich essentially, like donuts, are not really kicking in. But unlike donuts, donuts never really kicked in India. Sandwiches some way did, but now they've fallen out of flavor. So this particular bet is totally off, in my opinion. It's totally off. But these people, uh, Mr. Rajat Mittal, my brother, says even Mr. Bikchandani invested in Wow Momos. Well, he's a foodie. He also invested in Burger Singh, I guess. Yeah, so he likes food, I guess. Maybe for more valuation in IPO, as a run-up to IPO, says Mr. Sumanth Kumar. Well, that is okay. But the point is, even for an IPO, if they were looking at, let's say, a younger audience or a Western influenced audience, it would have been good. The way I was looking at Haldiram's story, right, just purely from an analysis standpoint, studying their history, I've read Haldiram's biography, The Bhujia Barons, which is perhaps one of the best books that have come out in India. Absolutely, it's a wonderful book. Everybody should read that book, right? Haldiram's is India's Starbucks or India's McDonald's. It's the poster child of Indian food around the world, right? That is Haldiram's. I mean, Haldiram's is Indian food in Kenya, Indian food in US, Indian food in Australia. It could be Indian food everywhere. Indian food is growing in brand equity. Indian food is growing in brand, visibility, ubiquity. Everybody across the world is loving Indian food, and Haldiram's could be the proxy for Indian food, right? So, in a way, just as McDonald's revolutionized burgers, the American hamburgers, right, and brought them around the world and had a $150 billion company, right? Or Starbucks essentially took coffee chains and created a $200 billion company. That was Haldiram's for me. Now, Haldiram's tying up with a sandwich chain called Jimmy John's and trying to be a jubilant is a step down from that, right? Haldiram's would have been great if it actually tied up with a South Indian chain, let's say, right? It went deeper into Indian cuisine. That would have been way more interesting for me personally, just as a bystander. Now, I don't know as much as Agarwal's, of course, the family, when it comes to food business. But when you're analyzing, right, this doesn't go well with Haldiram's story, unfortunately. I mean, this might be an easy way for them to make money, right? Tying up with Jimmy John's, bring them in, they have their SOPs, a sandwich chain, let's see what happens. But it doesn't go well with the Haldiram story. Haldiram's could be the ambassadors of Indian food around the world. Doesn't that story sound nice to you? Let's say there is a story. There's Haldiram's being, let's say, a house of brands, okay? Jimmy John's, then tomorrow they tie up with an Italian chain for pizzas, day after tomorrow they tie up with a Chinese chain or a Korean chain for Korean food. Is that a good story? Or is Haldiram's being the face or the ambassadors of Indian food around the world? Is that a good story? I personally prefer the earlier one, but I don't run Haldiram's. Would be great for an Indian brand, says Mr. Tushar Tiwari. Right? Right? That's exactly what I think. I mean, Jimmy John's, okay, all right. What can you do about it? Haldiram's plus MTR would have been a good Indian story around the world, says Mr. Manjunath Madhabal. Yes, exactly. So instead of diluting its presence, Mr. Vaibhav Manocha says, aren't financials a better way to look at it rather than just branding or a good story? No, financials will, says Mr. Vaibhav Manocha, financials will follow. Financials will follow. So it's about the brand's punt. Right now, you're looking at a brand instinct going in a direction of tying up with a company, right? Now, they're going to be investing money. They're going to be distributing this brand in India. So financials will follow. I'm not saying that the financials essentially will prove to be lackadaisical. They might or they might not. The question is, where does the vision go, right? Where is the punt going? Where is the instinct going? Is it going in a direction which helps the story, which helps the vision? Or is it just going anywhere? This particularly seems to be like it's just going anywhere. It's that's what I mean. So you never know if this is going to work or not. Maybe this does, maybe this doesn't. All signs right now point out to it's not going to work, right? Because sandwiches, nobody gives a shit about sandwiches in India. But if it does, it's good job. But could this good job have been done somewhere else? That is the question. That's what we are discussing. Maybe this is one of the first steps in diversification, and soon more tie-ups will be there. Yeah, and I'll be damned. But anyway, folks, that is what it is with Haldirams. I hope you liked it. If you are interested in India's QSR story, India's food story, India's entrepreneurial story, you should pick up Bhujia Barons. I've been promoting Bhujia Barons for a very long time. Never got money, never got any commissions, but I've been doing God's work. Anyway, folks, moving on. Uh, Grow IPO is revving up in wealth tech deals. A lot of companies are starting to raise a lot of money. VC money, of course, right? So, uh, wealth tech startups are really hot. If you look at some companies which have been funded, there are a few examples like Stable Money was one, and so on. Asset Plus is a Chennai-based startup which got 18 million in a fresh round, followed by the money that it had already raised by Kamath Brothers, Zerodha Rain Matter. So a lot of money is gonna flow with wealth tech. The beauty of wealth tech is that you can't go. It's difficult to go wrong with something like a stock trading, stock broking kind of a play. It's just a perpetual money machine, right? It's very easy money. It's a very hyper regulated space, but it's predictable business, right? And VC seem to have realized that Grow is a pretty good success story. The only thing is, why didn't Grow come earlier? So I've written a lot about it. Zerodha started in 2010, 2009, 10. That's when it began. For a full 8 years, Zerodha got no competition. In fact, Zerodha, I read Zerodha's story in a book called No Shortcuts, and also just scrolling through Zerodha's early blogs, the very early blogs in 2011 and 12. At that time, there was news that they came out with that they might raise $2 million from a Dubai-based fund, and that didn't go anywhere. So even Zerodha couldn't raise money. But the point is, Zerodha grew, right, bootstrapped, and just doubled every year. Every year the revenue doubled. There was 50% net margins and so on and so forth. But still no VC company came for 8 years. Even the established angel broking and all, they didn't come in the same business for 8-9 years. Right? Grow only came in like 2018-19, right? If I'm not wrong. Maybe even later. Angel broking same. Kotak, everybody came very late. And Zerodha got a run. So the question is, why didn't these guys see it earlier? Right? This is your job, right? And now everything is working out. Now you got one example. So all the money is gonna go towards wealth tech, which is funny. Anyway, moving on, folks. Moving on. SEZ local market flows may get easier. PMO ministries in talks to make SEZs more competitive. Of course, special economic zones plan to scale up manufacturing, shield export sector from global uncertainty. What is on the table? What are they doing to help SEZs? Lowering duty on sales to domestic market. So if you are in SEZs, if you're selling to the domestic markets, the duty essentially gets better. More flexibility in operations, right? Outsourcing allowed from SEZs, and permitting INR payments to domestic services provided by SEZ units. So a lot of action. By the way, this is one of the very obvious things that the government has been trying to do. SEZs were very important for the national mission. So that is on. Speaking of the national mission, the tolling policy is also getting a revamp after 30 years. The last time tolling essentially, got renewed, it was 1995, right? So now tolling calculations is gonna get improved. Earlier calculation is based on what is the user willing to pay, how much, what is the money that the user is saving, what's the vehicle maintenance and cost, and so on and so forth. That was the formula. Now it's gonna evolve into in new ways, and basically incorporating new distance and money saved and so on and so forth. That's what's going to happen. So this is once again a very important and a natural consequence of things, right? So we've been building highways at the speed of light. We've slowed down. India has slowed down in building roads in the last couple of years, but we've been very heavy on the road building, right? For let's say before 2014, 2011, 12, we were used to 9 kilometers a day, 9 to 11 kilometers a day. That really peaked to 25, 30 to 50 kilometers a day, right? At a few places. The target, says Mr. Nitin Gadkari, is 100 kilometers a day of road building. Now, when it comes to that network, a natural consequence is maturation or evolution of the whole tolling play, which is exactly what's happening. So let's see how it shapes up, right? Electronics companies are calling for government to help with the PLI. We've discussed this. Viewers of Thinkers Frequency already know. Uh, PLI was the bedrock upon which the electronics segment was created in India. It was not entrepreneurial genius. It was political will which led to manufacturing revolution in the country. We manufacture smartphones in the country or electronics in the country not because there was a great entrepreneur who had a great vision. It was because of political will made it necessary for India to stop importing its electronics, right? So India was importing about, how much was India importing, right? It was importing, mobile phones have declined 1% to 78%. So I'll just put you a number, folks. So there is a comment by Debu Yati Hazra. Any thoughts about agri-tech industry? What's the future waiting for it? We'll discuss it. But let's talk about electronics industry and how that is important. So we used to spend billions and billions of dollars on importing smartphones, importing electronics, right? Then PLI came in 2017, I guess. That's when we started making manufacturing phones, right? For the first few years, for the first 7 years or so, or in 2022, that's when we broke even. That's when we started making money on smartphone manufacturing, right? And since 2021, 2022 is when smartphone exports really spiraled up. And now they're adding a lot to Indian economy. From billions and tons of billions in imports, now we are making forex because of smartphone manufacturing. All of this could happen because of the production linked incentive scheme churned out by the politicos. Now, the question is, this is the same thing which is happening with the shipbuilding play. Right now we spend $70 billion on foreign ships every year in this country, right? Now those $70 billion are gonna switch, right? What they're talking about is, we are a peninsular nation, we are a huge country, we don't need to be spending $70 billion on foreign ships every year, so you gotta start making ships. Now you're gonna see some of that import value is gonna come down, and then gradually, hopefully in 10 years, we are going to be making money in shipbuilding as well. But what's to be noted is that shipbuilding is way, way harder than electronics manufacturing. Do you know why? Because electronics manufacturing, as Mr. Ajay Chaudhary says, is more of a screwdriver technology. Screwdriver technology, what does it mean? You get kits from China, or kits rerouted from China to, let's say, through Vietnam, through Singapore, through wherever, and then you just put them together in a glass, right? And then slowly and steadily you start making glass, you start making the box, you start making some connections, and so on and so forth. Even now, the value addition that Indian manufacturing has in smartphone manufacturing is about 28%, right? 25, 28%. China has 38%. Mr. Ashwini Vaishnav says that value addition will reach to 32% at 38% by 2032. So that's that's how important PLI has proven to be. Now the government is essentially looking at taking PLI away, and then these people are resisting. Why are they resisting? They're saying that our edge in the competitive space is very, very limited. So if you take the PLI away, we won't be able to compete with China, because China has promised US that the fentanyl exports will be, the smuggling will go down and the tariffs will go down. And if Chinese tariffs go down, our edge in the export markets disappears. Now the government says that you've been getting the PLI incentives for 8 years now, and you are like I'm forgetting the whole number. Maybe it's $30 billion, whatever. The export number is huge. You are making so much of money. You don't need these PLIs anymore, right? But these people are basically resisting. A comment from Mr. Abhishek Sharma. Any thoughts on how the thinkers can ride the wave of shipbuilding industry's rise in India? Of course, we've talked about this, Mr. Sharma. Mascot Dock, GRSE, right? Shipping Corporation, Cochin Shipyard, all of these companies, they're not many companies, by the way, in the shipbuilding play. Very, very few companies, right? These are a few companies which in the shipping play are very, very prominent. So a lot of action invariably comes to these companies, and then some private sector players are also gonna come in. So it's very easy for us to ride, and we can just ride and forget, right? So if you could just put it and forget, 10 years later you're gonna find out that, oh, this is great. And forget about 10 years. I think 10 years is a scam, right? No trusting 10-year projections. It's just 3-4 years. In fact, if you ask me personally, I've doubled my money on Mascom in the last couple of years, easily, like at least double. Mascom Dock, Cochin Shipyard, JRSC, they really pulled it. And I'm not a trader, so no, this is not, I don't want SEBI on my ass. Moving on, folks. So electronics, we've talked about that, right? PLI led momentum. If I missed a few numbers, let me just help you with a few numbers. I'll just check. I deal with so many numbers that sometimes those numbers get mixed up. Okay, yeah. So this is essentially a very, very important number. Okay. Smartphones, which dominate the category, grew 60% to 13.4 billion in FY26 from 8.4 billion in FY25. So that is the kind of growth rate that these people have been doing, in the smartphone play. But I was more interested, to be honest, in the entire number, which I'm not being able to find right now. Sorry about that. Let's move on, folks. Let's move on. By the way, speaking of exports to US, there's this lady who has given an interview today, and she's spoken very well. So she says that America is a $31 trillion economy, $30 trillion economy. She's Sonal Desai, Executive VP and Chief Investment Officer in Franklin Templeton Fixed Income. She says that American economy is $30 trillion straight, okay? 70% of it is consumption. That is, I guess, 40, how much is $21 trillion? And she says 70% of that is services. So, $14 trillion. $14 trillion are services which can't get taxed, right? So just 7 trillion is the tariff situation of US. That is what is what the total play of tariff is. So when Donald Trump says tariffs are gonna save America, he's talking about the 7 trillion, right? Of course, 7 trillion is huge. It's almost twice Indian economy. But, how much is India selling to US? $100 billion? She says essentially that the risk of recession essentially is very low despite tariffs. Moving on. That was just a piece of information shared by Miss Sonal Desai. A lot of action happening, right? In Pakistan, Asim Munir has essentially taken over. It's a coup d'etat, essentially, right? Abolishing the post of chairman of Joint Staff Committee. He's field marshal for life and so on and so forth. A lot of constitutional changes he's also done, right? So Pakistan is a shithole, will always be. But Pakistan is causing unnecessary trouble to India. Pakistani Navy ship in Bangladesh waters after 50 years, which is huge, right? Which is very, very incredible. India, of course, needs to respond, will respond. All eyes on February when the budget comes along. And we need to see what India does as far as its defense spend is considered, right? Speaking of defense, there is an air show which happened in Guwahati, Assam, of course. So Brahmaputra flypast air show in Guwahati. Why did it happen? Because Bangladesh recently threatened that we are the only way Northeast can access the sea, right? So that's what they said. And then there's also a chicken neck problem, right? The connection of India Northeast to the entire, to the rest of India is basically a very narrow parcel of land. So that is an issue. Let's see how India essentially faces that, right? Very, very necessary. Very necessary. Moving on. A lot of political chit chat, which we won't discuss. It's dumb. It's dumb. Moving on. Foreign arrivals may leave better memories this year. Inbound arrivals could touch 10 million, but likely to stay below pre pandemic numbers amid high overseas bookings. So, Indian tourism is essentially looking at lower than usual foreign arrivals, right? That's not cool. The trade guys say that India is not promoting itself. Like, if you remember, years ago, there used to be campaigns called Malaysia Truly Asia. If you open Twitter, you're going to see a lot of ads by Dubai, right? Australia has a very, very nice campaign. India is not promoting itself, right? That's what these people are saying. These people, obviously, the trade tourism guys, cannot point out the actual problems with the country. A lot of people will quickly jump and say it's not the promotion. India has a lot of problems when it comes to cleanliness, and Swachh Bharat has been a total failure, and so on and so forth. Well, that is true. A lot also depends on centralized branding by the country, right? Which we've not been able to do. So inbound arrivals have not touched the pre-pandemic levels. What does it say about the country, right? Of course, when it comes to the capital city is Delhi, and Delhi is, of course, a big news maker, and for all the wrong reasons. So if you look at the entire year calendar of Delhi, uh, October, November, December, January, right? These 4 months, which are supposed to be the most beautiful months, September, October, November, December, January, 4 months, they're literally very, very bad. September and February, these are the months of respite. February, March, before September, you have August, May, June, a lot of rains, and that sort of floods the country. And then before that, you have extremely hot summers, like 50 degrees. So, if this is what's happening with Delhi, how can you expect more, uh, you know, uh, foreign arrivals? So that's a trouble. India will have to sort that. Tourism has been a major focus of this particular dispensation. They've been very bullish on tourism. They've really, done a lot of things as far as tourism is considered, but somehow something is holding India back. And it seems to be basically an unsolvable problem. Speaking of these problems, folks, there are protests in Delhi. Protests in Delhi around pollution. So people have come to the streets, and people are demanding some solutions as far as uh, you know, uh, the whole air pollution. Now, the timing of this protest seems circumspect to me, because you remember what we said. No protests are organic in this day and age. No protests are organic. So maybe in 2015-16, if you would have looked at a protest, you'd have been like, oh, this is an organic uprising of the populace, right, against the cruel machinery. But now it's like, who's funding these guys? Do you also feel that? Because that's how it is, right? So, pollution, Delhi pollution has been on. How is that this particular year everybody is rallying around it? How is it a news item, and why is nobody blaming the stubble burning place? So, of course, a lot of political undertones on the way. Mr. Abhishek Sharma has a comment. He says, despite being a capital, it doesn't look like the capital at all. Mr. Vaibhav Manocha says, COP is around the corner. COP? What do you mean by that, Mr. Vaibhav Manocha? So, it doesn't look like the capital at all, says Mr. Abhishek Sharma. Well, I disagree, Mr. Sharma. Delhi has a lot of beauty. Delhi is a very beautiful city. Intrinsically, Delhi has a lot of potential, right? It's just that a few solvable problems which have been dragging on for 15 years, uh, that essentially is a very big issue. Mr. Ravi Kumar Gupta says, convention of parties. Yeah, maybe, definitely. In reference to the protest play, right? It is very, very weird, whatever is happening. But I hope, I'm not anti this protest, because I'd love to myself sit on the street and say, please, solve this. And their cloud seeding experiment also failed. The IIT Kanpur guys, they embarrassed themselves, right? They couldn't do it. Unfortunate. Unfortunate. Anyway, folks, TVS is gearing up for a bigger Europe play. TVS has done really, really well. I've always been bullish on TVS. Let me check TVS share price, by the way. I'll check 5 years. Whoa, 625%. That's nice. 625% is very cool, man. 625% in the last 5 years. So TVS, by the way, is looking at new growth frontiers. It's gearing up for a Europe play. So Apache 300 and so on and so forth, some EVs, a lot of bikes and all, they're going for Europe. So does this mean, and TVS is already, by the way, number one in India. Hero has lost a lot of ground and TVS has taken its place, which is amazing. And TVS isn't slowing down. So the thing, a very easy way to recognize great companies is just look at the management. So if you look at Venu Srinivasan sir, or the TVS management is just extraordinary. These people are just beautiful, right? They are very, very humble. They are very, very focused. So in the face of everything that came, right? So everybody said that Ola is going to kill TVS and so on and so forth. And these people just slightly, calmly, dealt with the situation, came out with products and so on. So TVS, by the way, seems to be beginning of TVS progress towards industrialized markets. Typically, we are focused on emerging markets, but now we're going to blow up. So that's Mr. Sudarshan Venu. So Venu Srinivasan and Sudarshan Venu. Am I wrong with TVS founder name? Just 1 second. TV Sundaram Iyengar. 1 second. Yeah, Sudarshan Venu. That's the TVS hire, right? So maybe I'm missing out. What's his father's name? I'm missing his father's name. Is it Venu Srinivasan? No, no, right? Anybody? Can anybody help me? One second, folks. Yeah, it is. Yeah. Sudarshan Venu Srinivasan. Great, great, great management. And TVS Hero, by the way, has fallen by the wayside. It's number 3. Let's see what happens to Hero. TVS seems to be in a very, very good place. Moving on, folks. Branded residences. Realtors teaming up with big luxury companies. Now, this is another one in the long list of ultra premium real estate growth, right? Branded residences. You know what this is? This is real estate companies tying up with hospitality companies and coming up with units which are essentially 5-star hotels come houses. That's branded real estate, branded residences, right? A lot of action in this particular play. If you look at 5-star amenities, so M3N tying up with Jacob & Co, luxury watch brand, right? And then there's hospitality companies like Marriott, ITC, Taj also entering the fray. So this particular play, again, this is happening in NCR. So while we talk about whatever we talk about when it comes to Delhi's pollution troubles or Delhi's perpetual infrastructure troubles, real estate isn't stopping at all. So they're talking about branded real estate, branded residences in Delhi. Now this, I wrote about this very recently and the article did very well, that if Delhi's pollution has been such a big problem and for so long, why doesn't Delhi's real estate crash out, right? No answers to that. Or perhaps the two possible answers to that are, maybe people are very optimistic, right? Maybe they think these problems are solvable and will get solved. But how long term do these people think? It's been on for 15 years, right? How are they thinking that these problems are solvable? It's a question by itself, in itself. And the second play is, the network effect, right? It's just impossible to escape Delhi, the power of it. Moving on, folks. Some dollars to India, tethered to stablecoins. India gets a lot of remittance money, some $120-130 billion a year. right? Stable coins are finding some play in that because there's some price arbitrage play. Stable coin $93, $89, some money, right? The guy can the money transfer guy can also earn, and the more money can be sent. RBI is not very cool. RBI has its own CBDC, but it's not really a private play. It's an currency, digital currency issued by the bank instead of a private player pegged to the rupee. So some regulatory hustles, but stable coins finding a way in the Indian remittance story, right? A crooked path. Stablecoins like USDT are pegged to USD. Demand for USDT has increased, creating a market. USDT trades at 4 to 5% above INR US exchange rate. So sending USDT and selling here would fetch 4 to 5% more. So again, 89 to 93. So you send USDT gets sold here for a lot of money, for slightly more, 4 to 5% more. So essentially, it basically leads to better remittance outcome, right? That's what's happening. But since it's not regulated, you never know how's this gonna pan out in future. Moving on, folks. India to gain from ex-ante digital market rules, says MCA. Ex-ante digital market rules, with basically talking about proposals to undertake a market study on various aspects of draft competition bill for the tech play. Digital companies had opposed an ex-ante regulations in their submissions before panel hearing, but the government wants it anyways. The MCA wants it anyway. Of course, anything when it comes to rules and regulations will be opposed by the big tech, right? But a lot of action needs to be happening in that domain. Moving on. Regulating big tech. India is essentially a colony of the big tech. We couldn't, we still don't have any substitutes for big tech. The problem is not that the big tech, we don't have substitute. We also don't have the future technologies. So let's forget about Google. Let's forget about Facebook. Let's forget about WhatsApp as well, right? But this whole chat GPT play, that is still in fertile ground, right? We still don't have anything. We have no plans of adoption for local players. We have no plans of essentially launching local players. Adoption is the main issue, right? If there is no adoption, there won't be any training. That will be a perpetual laggard situation. And we are just letting it go. So we are allowing Airtel to distribute Perplexity. We are allowing Reliance to distribute Meta. The government isn't stepping in and saying, hey man, you can't do that. You got to pick an Indian player and distribute that. Nobody's saying that. Why? We're just gonna lose the next frontier as well. I don't give a shit about the past, right? What happened, right? Big tech, China won, India lost, US won. That's okay. But at least this particular technology, right? Make like server AI ubiquitous or anything. I mean, whatever the government is working on, they should lead it to mass adoption, because without mass adoption, it's just gonna keep going behind, right? And then nothing will happen. Very sad. Moving on, folks. A very interesting play. Assembly elections trigger labor worker shortages in big cities, right? It's interesting but not surprising. Whenever somebody says that, hey, Kerala or high per capita income country, states and cities, they fund the rest of the country, right? That's the core argument. When you're talking in policy circles, these people say that why should Kerala bear the burden of Bihar or UP, which are overpopulated states, right? It's not a sin for us to be better when it comes to population planning. The answer is that you subsidize the poor states by money. The poor states subsidize you with cheap labor. So it's a two-way street, right? But a lot of people forget that. Whenever people are arguing about a lot of policy issues, they feel that the rich states, let's say Maharashtra or Karnataka or, whatever is your example of a rich state, they are doing a favor to the rest of the country by taking the burden, bearing the burden of the poor states, right? Well, that obviously is wrong, because you can't stand, if not for the labor that comes from these states, right? Everything stands on their shoulders. So a lot of people forget that, uh, but not the viewers of Thinkers Frequency, right? Moving on, folks. So true, says Mr. Ravi Kumar Gupta. Andhra to ink 410 MOUs worth 9.8 lakh crores. 9.8 lakh crores is roughly $15 billion. Oh, I'm so sorry. $150 billion. Yeah, roughly $150 billion, 150 to 180 billion dollars. And 1 lakh crore is 12, 14 billion. Yeah, $150 billion approximately. Begin work in a year. Andhra is really going heavy. Andhra, of course, got $15 billion from just Google, right? That is one commitment. So you can imagine, right? If this is just one company has come up with $15 billion, they might have a lot of plans and a lot of data center operations. The state has already attracted $120 billion of firm commitment, but our commitment is to attract investment of $1 trillion. So everybody wants to, at the while sounding optimistic or while sounding ambitious, people sometimes just say funny things. But $1 trillion, like dreams should be great, right? That's what the beauty is. When UP says we're going to be a $1 trillion economy, it's awesome, right? It's awesome. Now, when that happens is to be seen. But if that is the goal, right, it's a pretty good deal. And if you can show investments leading up to that growth, it's awesome. It's beautiful. Moving on, folks. Sam Altman, Mr. Sam Altman has come out with a statement. Is going to say AI is going to come up with small discoveries, significant discoveries in 2028. Everybody's like, what is small discovery? What do you mean by small and significant discovery? What is a small So it's all vague. Sam Altman has been under fire for a lot of bullshitting recently, right? A lot of fire for a lot of bullshitting, and this is one of another one in that area, right? You don't know what's happening with AI. People in the fray have been saying that the LLMs as a technology would not lead to AGI. So there are other technologies will have to take up, because LLMs, what they can do is make good conversations and filter some information, and that also failing at the edge cases, and that is the reality of LLMs. And with that particular play, you cannot build AGI, you cannot build something useful. If AI is to transform into something useful, it will have to be a different tech paradigm, like vision learning and so on, which is the humanoid play, right? So that's what these people are saying. But till then, that doesn't go well with the OpenAI narrative. So they are asking for a lot of money. They're raising money. We've talked about the controversy around him saying that we're gonna, we have $1.4 trillion in commitments, of buying commitments. And then the person asked him that you're a $13 billion company by revenue. How can you have commitments of spending $1.4 trillion? And he said that if you're scared about OpenAI's future, you can sell your stock and I'll happily arrange somebody to buy your stock. And that sort of led everything. Speaking of the AI revolution, Dr. Michael Burry's short has seemed to have plateaued, because Palantir essentially grew up the share. It is up 1.65% today. Not cool. So from its peak, it's still down by about 15%, right? But it's grown up. So the big short hasn't really panned out as well. Nvidia is down 10% in the last week. It was down at its peak some 12 to 15%. So it's still down. They're still down by 10%. But I don't think Dr. Michael Burry's short was intended to cause a 10% decline. That's nothing, right? That's just a movement. Anyway, let's see what happens. No signs. All signs, but at the same time, no signs of a global meltdown anytime soon. Like tomorrow or day after. Yet it can happen anytime. So both of the statements are true, right? It's like a Schrodinger's cat situation. It's dead or alive, nobody knows. Maybe it's both. Maybe it's, anything. Moving on, folks. Lenskart could see a modest Dalal Street debut. They're saying the grey market premium, a term, an abbreviation which Mr. Sharma shared with me. The grey market premium has fallen down from 15% to 3%, right? 3.7%. The grey market premium has fallen down. So I am in a mood to short the Lenskart stock. So I'll wait till it comes IPO. And it's gonna be public, right, in 4 minutes. So it's gonna see a pop or not. We're gonna see, and when it pops a little, that's when I short the stock. That's my plan. A very small short, just a symbolic, just to put my money where my mouth was and see what happens, right? See what happens. Let's see what happens. So the unfortunate problem with Indian shorting is that it's very hard. So shorting it cannot be continued overnight. For continue to overnight, the stock will have to be a part of the FNO thing, and that is a whole process which not every stock is. So Lenskart won't be. The whole SLB, where you can take the stock and carry it forward and pay premiums if it goes up, that is not in India, very, very prominent. So it's very difficult to short stocks because you can't, like, you never day trade, right? That's not a good way. If you are looking at daily movements of stock, that's a bad idea. The good idea is always to look at fundamentals which are long-term fundamentals, or let's say mid-term fundamentals, like how we did with Ather, how we did with Ola, how we did with a lot of companies, right? So with that perspective, I'm 100% sure that Lenskart will be worth like $6 billion soon, right? But I'm not sure whether it will happen today. So that's that. Mr. Peeyush Sethi says, looking good, sir. Oh, really? Am I? Thank you. Thank you. Thank you so much, Mr. Sethi. Anyway, moving on, folks. I would have preferred if a lady said that. But this reminds me of a joke by Rush. So Rush is a band that I've been following and playing for a very, very long time. They've taught me a lot as a drummer, as a guitarist, as a bass player, as a, not as a vocalist, but yes. So they said that when we started out, right, the kind of music we played, our fan base was 100% male. But as years went by, as we progressed, as we became big, as we started doing international tours, our fan base remained 100% male. Right? And that's my situation as well, right? Not the fan base, whatever I do, it's 100% male. Look at the comment section. It's a sausage fest, man. Makes me want to kill myself. It's like, no, I'm just kidding, folks. But thank you. So states may defer their bond auctions as yields harden. So yields are so the government, essentially, RBI is said to have asked banks to postpone issuances to the end of the fiscal year to ease supply pressure as prices crash. So if there's a lot of bonds, right, the prices crash, the yields grow up. So states have been asked to defer their auctions, to take some time, defer them out, right, so that the bonds don't essentially crash and the yields don't go big. So the market needs to be tapered. That's what's happening. US, by the way, is looking at 50-year-old bonds, 50-year mortgages, 50-year mortgages, folks. Can you imagine? So a lot of problems, of course, with US, but India on the whole is very, very stable. Moving on, folks. Festivals give some color to the short-term debt market too. Well, we know. Now comes a bit of geopolitics. China has halted the ban on exports of dual-use metal like germanium and so on to US. Suspension eases pressure on global tech supply chains. US-China warming up, right? China eases exports curbs on Nexperia chips as well. Now, we discussed, so viewers of Thinkers Frequency should remember the Nexperia play. Nexperia is the Dutch company. right? Chinese company in Netherlands, they nationalized the company. China got angry. They said we have to. This is security concerns. China's Nexperia blocked supplies. Everybody started, becoming sad because Nexperia provides chips to automotive guys, the cars, the low end chips, but which work in cars. So that was a huge problem. China has curbed the export, like eases the curb exports from Nexperia chips. So the automotive sector is happy, happy. Market is open. Market is open. Let's look at Lenskart, folks. Lenskart share price. Muted share drug debut. Okay. It's not yet showing me. That's what's happening. Not yet out. Ahead of 10 a.m. listing. So 10 a.m. right? That's when it's gonna come out, according to Money Control. GMP tanks to rupees 10. GMP has tanked from 15 rupees to 10 rupees, man. Maybe like 2% pop. Like these guys will get screwed. I'm gonna short. Yeah, I think it'll list at 10. You're right. Moving on, folks. China's consumer prices rise slightly as factory gate deflation eases. Anti-inflation. It started easing. The demand cycle is picking up. So consumer prices have slightly risen, which is very important. Deflation is never a good news, right? Speaking of a deal that we were talking about, Novo Nordisk, Pfizer, they wanted to buy Metsera, 6.5 billion earlier, went up to 10 billion. Seems like Novo Nordisk has, lost the battle. Pfizer is gonna win the Metsera play, $10 billion. But Novo CEO says he's somebody called Mike Doedstar. Doestar. Sounds like a Dutch name. Anyway, so he's gonna Dutch or Swedish. He says that we're gonna look at inorganic opportunities more and more. So they're gonna be looking at more acquisitions. Maybe an Indian play, possible. Right? A lot of war shit happening. No respite there, man. No respite there. All the troubles which the government, world economy was facing earlier, they're still there, but somehow everything goes up, right? With that, we come to the end of the 165th episode of Thinkers Frequency, folks. I hope you had fun. I hope this added value to you, right? This definitely added a lot of value to me. It was fun for me. Today was fun. Yesterday, there was nobody. There was just 6 people and no chat messages. I was like talking to a void, right? So I was like, comment section is awfully quiet today. But today, it was very nice. So thank you so much. I should thank Mr. Abhishek Sharma, Mr. Ravi Kumar Gupta, Mr. Sumanth Kumar, Mr. Rajat Mittal, Mr. Tushar Tiwari, Mr. Manjunath Madhubal, Mr. Vaibhav Manocha, Mr. Debuyati Hazra, Mr. Peeyush Sethi, and everybody else who joined, right? Our daily mental workout, our daily dose of insights and analysis which don't lead to paralysis right before we punch in comes to an end. It's 9:19. We will punch in. I wish you a beautiful day personally and professionally. And I'll see you tomorrow, same place, same time, hopefully. Bye-bye. Take care. Please discuss agri-tech tomorrow. Sure. Have a good day, Nishant and Thinkers. Bye-bye, Mr. Bhandekar. Take care.